Is taken, what this all means for homeowners. I'm joined now by 1300 Home Loan Managing Director John Calenda. John, great to have you on the show today. The big question, the most obvious question, your thoughts. What are the RBA going to do when they release their announcement in about an hour, just over an hour's time?
Personally, I'd like to see the interest rates fall, but we're unlikely to see that happen. You know, they reduced the rates by 50 basis points in May, and again by 25 in June. So I think they're going to play a cautious role in a position and leave them unchanged for this month.
What is it that drives you to want to see a further cut? We've seen some 75 basis points or so lopped off over the last few meetings. Why do you think they need to go more?
Well, I think they're unlikely to see, you know, any stimulation of the economy taking place. So by the end of this year, I can see the rates falling by anywhere from 25 to 50 basis points, which will be what's required to get the economy maybe stimulated a little bit more than what it is now.
Because some people might suggest, well, if you take the data, albeit backward looking, that March quarter GDP up 1.3%, certainly beat expectations. That would suggest, as well as you know, the unemployment rate round about that 5.1, 5.2%, that things are looking reasonably good.
They might be at the moment, but you know that they're only one set of data that's come through. It'll be interesting to see what happens over the coming quarter. And I think my take on it is the Reserve Bank will probably more likely be forced to drop the rates in order to get the economy back on track.
Have we seen, from what you're looking at, have you seen much flow and effect in terms of new home buyers, new home sales, an increase in that at all from the cuts we've seen this year?
There's only been a little bit of activity that was really just took place in June because of the first home buyers grant finishing. So I think for the coming quarter we're more likely to see a more subdued market. You know, you've got the global financial crisis which is still hovering over our heads. You've got the Chinese economy appears to be slowing. You've got the carbon taxes coming into play. There's a lot that's really hovering over top of consumer heads, and that's really taken a battering of the consumer confidence. So,
is that the key? Is it, John? It's a sentiment issue. It's a battered confidence problem.
Definitely. You know, there's a lot weighing on, as I said earlier, with what's happening around the world, and that's really having an impact on consumers. So that's why I think they're more likely to see the rates drop later on this year. But
I wonder, from the RBA's perspective, if 75 basis points worth of cuts hasn't done much to improve sentiment, what another 25-point cut is going to do.
You're right. If they did anything at the moment, it's unlikely to do anything. I think we need to see the economy sort of settle down a little bit, and that's where they'll probably need to take a little bit more decisive action once the recent rate cuts sort of flow through and they get evidence that it's not doing much to the economy.
Indeed. John Calenda, look, great to talk. Thanks a lot.
Thank you.